and much more. Well, 30 minutes to go, and markets are in a good mood ahead of the April series derivative expiry. In the last 6 sessions, Sensex has actually risen from 59,567 mark to now 60,545 odd levels, 246 points uptick there on Sensex, and actually the Nifty 50 has also added over 1% this week only amid strong Q4 earnings from major firms. So 17,887 is the level where we are at, and 70 points uptick there on Nifty 50 as well. Let's do one thing, let's pull up some of the gainers for you in today's trading session. So of course it's all about Bajaj twins today. They're on your screens. Bajaj Finance up 2% in today's trading session. Bajaj Auto, we have UPL as well, that is trading really well in this trading session. Bajaj Finserv. So I think it's all about Bajaj twins, Bajaj Auto, Bajaj Finance, Finservs, all doing really well in today's trading session. Dr. Reddy's, SBI Life on the back of the numbers, doing pretty well in today's trading session, 1.5% uptick there, and Hindalco also. So 1% up on that particular counter. But what's not contributing in today's trading session? Let's look at some of the losers as well. So if you see some of the losers in today's trading session, we have Dish TV, Z Entertainment, which are among the losers. HDFC Life. Now we had SBI Life in our gainers list, and on the flip side we have HDFC Life, and we'll come to that as well in a bit. Axis Bank ahead of its numbers, it's trading in the red today. ONGC also among the other prominent losers. And if you talk about the sectors, which sectors are not doing well, so I think apart from FMCG and PSU Bank, all the sectors are actually trading in the green today. And if you see Nifty Auto, Nifty Reality Space, now Reality Space is in focus and it's doing pretty well over the past few sessions, 1.5% uptick there. And Nifty Metal, IT also to the tune of 1% uptick there as well. But which are the major triggers that you should now watch out for, and where are the markets headed going forward? To discuss this and much more, let's quickly welcome our guest on the show today. We have with us Mr. Rikesh Parekh, who is the Principal Investments Officer at Rockstud Capital. Thank you so much, Mr. Parekh, for taking the time out and joining us here on Business Today Television. So I want to begin by asking you about your market outlook. I mean, which are the key triggers that one should watch out for, and where are the markets headed according to you, and will this bull run continue in the upcoming sessions?
Good afternoon, Tanya, and thank you for on the show as such. To answer the question, the immediate trigger and what the way forward as such, we look at it in two parts, where is the immediate concerns or the triggers are as such. So right now the market is very much focused around the earnings season. We are right in the middle of the earnings season as such. And the second most thought around the mind is how the monsoon is going to trade around. While IMD has talked about a normal monsoon, there is a talk of El Nino and a lower monsoon by the Australian media giant as such. And the other thing is the inflation. These are the three immediate things which market have been looking around. But if we look slightly forward to 1 year period as such, then I think so the major concern from the market would have been the central election, will be the next year in May, and the rate policies by the global banks, which there is a lot of expectation around the rate cut happening towards the 3Q or fourth quarter of the FY24.
Absolutely. And also, Mr. Parekh, what are your thoughts on this entire IT space? Because if you see, IT sector is doing pretty well in today's trading session, and it's the mid-cap IT space that is performing. So what is the best way to approach IT at this point in time? And actually, it is the large cap IT companies which have disappointed. So do you expect the mid cap and small cap IT companies to outperform their larger peers, and in the rest of the calendar year?
Yeah, sure. So if we look at the IT sector overall, over the last 1 year, they have underperformed by roughly 15% over the last 1 year as such. So, that seems that the market already discount the expectation as such, and they have been building in some amount of concern around the growth part, and which to a certain extent in the large IT space means we saw in Infosys a big disappointment at TCS to a certain extent. But while this week as such, the lot of the mid cap parties they have met the expectations, or I would say the revised lower expectation of the market. So having said that, within the IT space, we look at the sectors which are the major concern is coming out of BFS segment. So there are other sectors which are not directly connected with the BFSI space. It's something like cloud or engineering department. So those are the green shoot where one can still be looking at. And as a house, we feel that probably IT, there remains a certain amount of concern because till the time we don't see a major uptick coming in the US Nasdaq market and the valuations won't be revolving that fast. We think that at the most there could be a market performer from here onwards.
Absolutely. And also, Mr. Parekh, there is one space that is in the limelight right now, and that is life insurance sector. So the life insurance players are also in focus right now, and SBI Life, if you see, and HDFC Life, both are in focus today, and as the SBI Life, in fact, posted better than expected numbers as well. So what are your thoughts on this particular space, and specifically if we talk about SBI Life and HDFC Life?
Well, I would say life insurance sector is a very hugely underpenetrated sector overall, and the growth will continue to remain so as such strong over there. In terms of the very particular names as such, HDFC Life, if you remember, means last 2 or 3 days back, it jumped smartly around 10% on the back of the news that HDFC Bank has to increase the stake over there. So probably this is the adjustment to a certain extent happening. The stock had already run up ahead of the numbers as such. I'll say all the life insurance company, SBI Life, HDFC Life, and ICICI Prudential, which reported earlier, have reported good set of number. And one of the reasons probably could be that in this budget, there was a tax which had come up, means there was a limitation which has come up that anyone paying more than 5 lakh rupees of a premium will have to pay tax on the redemption amount. So because of that, probably some amount of bump up in the collection one could have seen in the short term. Going ahead, probably we see there's a huge growth. There is absolutely no fine, and with a high parentage and pedigree, they should be one sector to look out for in the portfolio.
Okay, absolutely. And also, Mr. Parekh, new age internet companies, they are also in focus. And if you see stocks with the likes of Policy Bazaar, Delivery, Cartrade, they have all bounced back, and that too like very smartly from their lows. Only Nykaa has not able to perform so far. So what are your thoughts on this particular space? And do you think that now is the right time to step in maybe a few of these counters?
Yeah, sure. Means I think the new age technology means last year we see a host of the new age companies getting listed on the markets as such, starting from Zomato to Nykaa, all the way. So I think so. The evaluation were very high. The clear focus initially was on the growth rather than on the profitability. But the unlisted market and the listed market is different altogether as such, where the people are more concerned about growth. So having said that, if we see last 2 quarters onwards, we have seen the company guiding towards the road to the profitability. Zomato and Paytm has already delivered on the EBITDA level profit, although at excluding the ESOP cost as such. So the way forward, they have given the direction. So opportunity space is huge, but I think so. The real markets, the way they look at it is ultimately profitability, and that's the way forward. And also there was one more concern was there was a lot of venture capital stage which were looking to book out. So quite a few exits have taken place. So wherever the supply concern is over and the company focus towards the profitability is there, they will be surely be looking out as such in that space.
Absolutely. So profitability is actually a very important thing to watch out for. But also, Mr. Parekh, within the railway space, we have been seeing the likes of RVNL, IRCON. They have been doing really well of late. So what is your outlook, given that a lot of experts have been alluding to the fact that the order book is now looking very strong. So what are your thoughts on this entire railway space, and Any stocks that you like?
I will say it's not look at the sector very detailed as such, but the government focus on the capex as such is really helping them out. And within the railway, even the railway ministry budget has been also has been huge focus toward the capex part. Over there, probably one of the name which comes to mind is the Titagarh Wagon, which has got a huge order backlog, and also they have been participating in the Vande Bharat order as such. So the capex outlay by the railways, which is helping all the companies in this segment as such, and that is driving the force in this sector.
But just want to understand one thing, Mr. Parekh, that is there a frenzy? I mean, in some of these railways, defense, industrials, and cyclicals.
Well, I will say there is some amount of frenziness because initially these are the order books as such. So let's say something like defense. So we have got a lot of companies in the defense space. Just to give an example of HAL, which has got an order backlog of around multi-year order backlog. But the real execution will depend on what is the government allocation each year in the defense budget and the coming on the roll as such. So one can purely go by the order backlog. One has to also see the capital allocation happening each year in the budget towards the sector and the execution rolling forward as such, which will continuously support the order flow as such. But having said that, there is a huge runway to growth. These are the sectors where relatively neglected to a certain extent, and where the renewed focus has been there largely from the Atmanirbhar focus of the government as such. So I would say this is still an interesting sector to watch out for. Yeah, although it needs to be tracked closely in terms of the execution.
Okay, absolutely. That's the word coming in, so keep an eye on that. But also, one sector that is in focus today is FMCG. Though the sector is not able to perform today, however, all eyes are now on ITC. Now, this stock is actually sitting at record high levels, and we have other stocks as well, but all eyes are actually on this particular stock. So, what are your thoughts on FMCG space and specifically on ITC?
Well, on the FMCG space, I think so. Means today we have seen the actual management coming on the TV, television and guiding for the growth path as such. So, which clearly laid out that the urban growth is coming back, but the rural is still lagging far behind as such. And even if you look at the Nestle numbers which were out day before, it clearly shows that out of office space on the urban side is where the growth is coming in, but while the rural India is still lagging behind. So the companies in this space which are more into urban part, they are doing relatively well compared to the rural India on the side. Now, coming to the ITC, I think so this was one of the stock which has done phenomenally well and probably much ahead of the market expectations as such. I will attribute to two part. I think so. The main thing is the cigarette business, which was continues to do well, has really contributed. Also, the GST regime has ensured that there are no ad hoc price hike happening every year in the budget, so which gives them stability in terms of the on the taxation side as such. And lastly, the two other business of ITC, which are hotel and consumer. While hotel business would have, like if we see the other sector, they all bounce back, and the consumer segment, they also continue to do well. So all the three segment are giving a lot of support, and that is supporting the stock price. But I would just like to have a word of caution over here. This is one of the government hold stock, the 50 hold stock, so one can always expect some divestment happening at some point of time in future.
Okay, absolutely. So that's the verdict coming in on ITC. And on that wonderful note, thank you so much, Mr. Parekh, for taking the time out and joining us here on Business Today Television.
Thank you.
And well, look at the markets right now. I mean, 359 points, 360 now, uptick on Sensex. Sensex has now crossed 60,600 important mark, and Nifty is also trading above 17,900 mark. So that is, I think, a fabulous bull run, I would say, that we are seeing right now. And we had an expiry today, and actually we are having a very good expiry, April derivative expiry, and Bajaj Twins continue to be the top performers. But with that, let's wrap up this edition of Market Today. Do stay tuned for all the market updates and follow us on our various social media platforms like LinkedIn, Twitter, Facebook and Instagram. So until then, many thanks for tuning in.
for somebody who keeps an eye on risk so closely,
Yeah.
what do you make of the India VIX right now? May last year, I think it was at 26, 27. Now it's languishing at 12. Does it worry you as an investor or a fund manager that the India volatility levels have fallen to such low levels?
So then it's an interesting question. I will put this perspective. See, a lot of people have just started looking at VIX, and a lot of people look at VIX in isolation. Okay. The way we explain the phenomena is that